Hello, everyone! Welcome back to the RationalInvestor.com's Daily Brief Recap. Today is Tuesday, and actually, I don't know, let's see if we're recording. To the Rational Investor. Hey, we are. Today is Tuesday, and actually, I am not sure why. But for some crazy reason, Brian decided to do almost a 2-hour daily brief today for everybody. So we covered just about everything under the sun: stocks, bonds, commodities, crypto. I actually talked lots and lots and lots about crypto today. As you can see from the dashboard, Fjord is still working away on the engine right here. So this week, unfortunately, our dashboard data has been down. When it comes back, it'll probably tell us the same message that we're seeing on, broader market proxies like, in days gone by, I used to follow things like, where are we here? Oh, it's one of these screens. There we are. So new highs, new lows. Interesting to see broader market not overly happy there. Breadth, we were kind of talking about how it rolled back to the negative side. Remember we were sort of saying, did we cross back above that 50 line or do we sort of give it up? Am seeing a bit more interest coming back in on the big cap stocks relative to the juniors. And actually something that really jumped out at me today, I'm glad actually I see this here, is have a fun little sort of like it's the purpose of it is I want to be able to give students a nice simple framework, and really anybody who asks me, I don't mind, but anyway, I put this together to follow the market. And if we look at the big cap universe, we're seeing that repeated message over and over again. Ironically enough, half of our job as technicians is not to tell the market what we think is going to happen, but to actually just see in reality what's actually going on and then to react. Something I noticed, building this screen, it helps you sort of see the leadership in the market. And one thing that definitely is jumping out at me big time here recently is the transportation sector, which is sort of a proxy on the economy itself, is actually doing pretty well. And I suppose if we think about it, is companies like Amazon, are they shipping a couple things around right about now? And this shocked me, and this is why I like building this, because I haven't done it for a while. But in essence, this is the S&P 100, Dow, and all the different Dow stocks. So it's a good couple hundred of the biggest names, the leaders in our society. And it's interesting to see who's sort of on the leaderboard here today and has been recently. And quite consistently. Look at this FedEx. Look at this crazy price chart. I was shocked when I saw that. That's just straight up. So, let's not maybe call tops in the market until we actually see like proxies that historically sort of long time site guru, or not site, well, maybe site, I don't know. Market gurus, I'm talking, of course, about Charles Henry Dow. His basic thesis was that to see a breakdown in the industrial average, you have to see a breakdown in the components that make up the economy, i.e. the transportation sector. And I don't see any breakdown there at all. And even sort of lesser ones, again, at the top of the leaderboard. Keep in mind, this is a pretty big list of stocks that we follow. There's UPS. That's another shipping stock. What's their chart look like? They probably don't have the contract for Amazon, but still, is that an up chart? Sure looks like it to me. So, with that backdrop, I don't know whether I'm really ready to put a fork in it and call the top in the market until those transports start to break down. So that's what actually jumped out at me here, right? I like to follow Dow theory off of this matrix. And, the yellow line is the transports, the blue line is the industrial. So last January, February, you notice transports did not make new highs, industrials did, and kaboom. So do we have that situation now? Nope. So I don't really think that a stock market break is actually coming. Having said that, I definitely think that we're heading into some sort of apex here into this U.S. election. It's a political event. It makes sense. I mean, who knows who's going to win? Mr. Trump pulled one out of his butt last time. Might do it again. They always say, don't pick the winners until after the results. So my fear here is that the capitalists are bidding up price just in case Mr. Biden does win, because he's basically said he's going to raise taxes. And my hunch is if he does win, and that's sort of the eventual perceived outcome, then you're probably going to see the stock market top, and the capitalists will all take profits and just get the hell out before the tax code changes. So, interesting anecdote yet again. Heading into this election event, I'm not stepping in front of anything calling tops. And what I'm actually interested in, I sort of was joking about this with the community here, is I've thought long and hard recently that Bitcoin is an excellent leading indicator. And of course, Bitcoin's just taken off like a rocket here. So if that's the case, you can see oil is being dragged up here. Oil was floundering for the past few days. Nope, sorry, I'm heading higher. I got a feeling stock market's going to be dragged higher here. In fact, probably there. That's probably a better image for you. So, interesting. Bonds, of course, that would be sort of that. And that's really the direction we're supposed to have this conversation with you guys. I'm terrible at staying on message. So, US dollar index, big down day. Do we ultimately finally finish this AB equals CD move? I think so. Still think we're contained within this broader range. But also, too, U.S. politicians, I think today is the deadline to actually do a stimulus deal in the States. So I have a feeling a lot of the politicians are scrambling around right now. And the market's perceiving that, hey, they might actually get something done. And if they do, that would obviously be risk on. It would be dilutionary of the U.S. dollar. Federal Reserve's going to be able to go and lend out a whole bunch more money against that collateral, the U.S. government bonds. And the Fakezi continues. And you can see the oil there. It believes that, hey, that maybe we got a chance that this further stimulus will come in here. Stock market, of course, yesterday perceiving that any deals were dead. And then, of course, we've got issues with Google now. We've talked a little bit about all those, what do we call them, the mega F stocks of late. Maybe a little too big for their britches. Now we're starting to get things like antitrust lawsuits flying, and that talk of maybe breaking them up is gaining inertia. But I think probably the stock market broke yesterday on the perception that there just isn't going to be any further stimulus ahead of this U.S. election. So let's see what the politicians do by the end of the day. And I even said, this should be an interesting proxy on Mr. Trump as a politician. And if he can get a deal done where both sides agree and it puts a floor in the market, he might actually come out the other side heading into this election. Actually, people are like, well, he's kind of a dick and, don't really like him personally, but he got the job done. And, of course, he's keeping that China in line. So, you can't write better fiction than reality. Let's see how this all plays out. Should be fascinating. I still like the idea, actually, of the stock market moving higher here. I spent a lot of time in the Daily Brief talking about how it looks like the market wants to push higher. Sort of confirming that kind of thinking, bonds are getting whacked here, and maybe they're expecting more bonds to hit the market, right? Dilutionary. And also, too, going back to that matrix chart that I like to teach people, looking at intermarket analysis relationships, we notice that the idea, this is the TIPS versus the TLTs, or i.e. the demand for inflation-protected bonds versus why pay for that inflation protection? I don't see any inflation. The demand for that inflation protection is actually starting to trend higher. Man, we haven't seen that in a very, very long time. So I get the impression we're slowly turning this corner of the interest rate market. And if that's the case, then it would be logical that the bond market actually now will start trending lower in earnest, which ironically enough helps the stock market. So, keep in mind the central bankers and all of the bond investors in the world, they've had like literally a 40-year runaway bull market in bonds. They have done very, very, very well. Ironically enough, we might actually see that finally unwinding. What are they going to buy? They're going to buy Bitcoin! Well, maybe. Interesting through all of this, gold just can't buy a break. Bitcoin's catching a pretty nice bid through all of this. And yet gold is just sitting there, just picking its nose. Maybe it will play catch up, tough to say. 1 low, 2 lows, 3 lows. I gotta say, if this thing starts looking bullish, I could justify buying here. Yeah, I'm a little surprised it hasn't played catch up, but maybe it's actually playing that risk off kind of vote right now. And so as a result, it's just not catching much of a bid. Constructive. Nothing really more than that for me right now. And it's fascinating how Bitcoin is jumping up here and gold is just parked. Yeah, maybe we'll see it play catch up. I think I did see that the corn and stocks were running into a little bit of traffic here. Yeah, you can see the corn's kind of topping out a bit. And the altcoins, they just look like shit right now. So I guess the question ultimately, look at gold. It's trying to turn back up here. But, we've talked about oil and gold. So if this gold market really wants to get going in earnest, we got to see this oil market stop. So as it stands right now, I would still consider the gold and the silver constructive. And, this is a good analogy, right? Ideally, we want to come into the market. You'll see me, ironically enough, if I see a chart like that and I see an M, I'm thinking, okay, pullbacks into things like 50% rules will give me profit opportunities. This is where a tool like this, the 50% rule, really helps, because if we actually look at a 52-week range, you see that, we're up about 27% from the 50% rule. That's okay. It's just, what does it really mean if we look at a daily price chart? 50% rule is probably somewhere down in this area. Okay, do I really want to come in and be buying that kind of asset up there? I don't know. I'd probably best so we can cool our jets. So, same sort of, what do I like? I love to buy stuff. And you've probably seen, countless. In fact, actually, it's not on here. Actually, I'm thinking about buying one of these airline stocks because, geez, these airlines look really interesting. So you can see here we got a 55% chance to the upside, 55% profit window onto the upside. So what does that mean? Well, 52-week range, really, we could pop up into here. No problem. Probably test that high kind of thing. Keep in mind, this is the whole 52-week range. So 50% is sort of somewhere in there. So that's the kind of, I want to buy with that sort of the wind at my back. Technically speaking, we've got a realistic chance of making, seeing our asset purchase go up just from a pure technical perspective. So where was I going with all that? When I look at something like gold, you can see here is the price chart. You can kind of see, there's the low end of the range just over the past 90 days. There's the high end of the range, and we're sitting basically right about the middle. Just even if I look at just even over the past month, bottom end of the range, top end of the range, we're sitting right in the middle. So, the problem that I have with gold is that, and then of course if we look at a little longer term, bottom end of the range back there in March, top end of the range here in August, where's the middle? Well, it turns out the middle looks like it's somewhere down here, right? Let's see, 52-week range, 136 to 194. So just off the top of my head, actually, I think we even have it right here. Yep, there it is right there. So 50% rule is 165. Actually, price is a little bit higher than that 50% rule. So it's not like it's a slam dunk. Hey, I can make some easy money here. That's why I love this 50% rule. And what I love to do is I'll just go through my universe and I'll just say, okay, well, just show me what are the most attractive areas I want to be interested in. Right? And it's fascinating how I see, look at this, oil stock. I mean, I hate oil, but could I see something like OxyPete? I mean, you could see reload zone. Looks like W's are coming in here. Could we see a rally back up, fill in the gap into the spring, summer? Sure. Wouldn't surprise me one bit. And there's a lot of these oil names. Schlumberger, there's another oil-related stock. Probably exactly the same thing. So I guess where am I going with this? If I'm thinking bull on oil, and I'm thinking oil prices can move up, that's not bullish of gold. And it wouldn't surprise me if gold has to, maybe come back down to the bottom end of its range, put in W's, and then we can start thinking about gold again. But I don't really have like value indications from the gold market. And I think I've told you that before. Cost of production alone on gold, I think, is around $1,100-$1,200. So, flirting up in the $2,000 area. It's expensive. It's kind of like coming in and buying Bitcoin here at $11,000-$12,000. Maybe this is probably a good segue to jump over to Bitcoin. I definitely think, through this psychological event, this Jupiter-Saturn-Pluto conjunct event, what happens once, in fact, this year, 2020, was like once in a million year kind of thing. And I distinctly remember the panic environment from the 1980 event, and I was a broker and a trader, and I traded through the 2000 event. So I fully expect through this event, and the official sort of historical date will be December 21st. So that's still like what? Oh, geez, almost 2 months away. We do have one of these 2020, the Jupiter-Saturn-Pluto event, which happens in early November. And I get the impression that the market's pivoting around that. It might be an upside pivot because remember the March pivot was a downside pivot, so we might blow off top into that election event. That actually marks an upside pivot, and then there's your whole year. Pivot low, midpoint, and that actually wasn't the midpoint. Midpoint was like right in here. Remember June, July? Remember I was going on about that. And then your November pivot, which I think was over here, and boom, boom, boom. Pivot low, midpoint, pivot high, done. That wouldn't surprise me one bit at all. I think over the short term here, like I said, political events, there is talk of stimulus talk, that kind of stuff. I have to say, for whatever it's worth, who listens to Brian? I was pretty darn impressed with the conversation that I heard out of the IMF about cryptocurrencies. I did not hear one word about we have to stop these things. This is trouble. What I heard was these things are efficient. They're the next generation of money. Don't force me to watch Cold War East German television. I want to live in the modern world and have choice. And I think that was received very well. As a result, I don't think there's anything stopping crypto. But that doesn't necessarily mean if you go and buy, you're going to make great capital gains. So take that into context. Like, especially what happened in the summer. I think what ended up happening, and this is the tell of trouble in this space, is we had a whole bunch of moon boys and moon boy kids and stuff come into this space going, we're going to get rich. Because we're going to buy assets and they're going to go up in price, and we're going to sell them for cash and fiat at a huge premium, and we're going to go and buy our Lambos and hookers and blow. That's not the whole point of crypto. And actually, it was interesting in that IMF conversation. This little German guy, young guy, fucking smarter than a whip, he kept saying ledger, 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 ledger. He kept using the term ledger, 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 ledger. And frankly speaking, that's probably the right way to look at all this. So if you're getting into this space to make capital gains trading, hey, I'm going to make $1 million from trading. Well, that's a totally different conversation about, is this shit legit? If anything, what I also heard out of that conversation is we will take extra effort on the fringes where crypto interacts with the classic fiat system to go overboard on things like AML, KYC, and all those kind of issues. To a certain degree, DeFi was kind of like, fuck you to a KYC, AML. So I could see to a certain degree that, we might actually find that this becomes the focal point of regulation. And, hey, we got to keep an eye on these kids because they're not paying their taxes. Could be. Tough to say. Long and short of it here is I think that this is just the fluff unwinding from the space. Doesn't mean that they're bad ideas. And probably the best analogy of this is there's a person that I highly respect in this space who is touting this idea very aggressively back here. And frankly speaking, this was the time to get interested in this. But getting interested in this here and thinking, hey, I gotta buy this and make capital gains and Lambos and all that kind of shit, well, it's amateur, it's foolish, you're just asking for trouble. It's ironic, when we draw these huge ranges, you can see where Brian would start getting interested again. And up top here, ironically enough, we actually had some pretty well telegraphed short setups that had come in. How you traded this, it's up to you. Long and short of it here is I still feel very comfortable that we'll probably have a date with Mountain Man here. It wouldn't surprise me. One thing that really did surprise me about the crypto space this morning was the very clear disconnect between sort of the, and this gets difficult because I consider crypto entirely a risk asset class, which is fine. There's nothing wrong with that. But within that crypto space, there's obviously a food chain, right? Good, better quality Bitcoin, shittier quality shitcoins, right? Where something like a chain link falls into that equation, my hunch is it's probably more on the quality side. And this is just really more a conversation that price. I mean, come on, people. If we put this in dollar terms, how many X's is that? 100X? It probably is like 1,000X. Who knows? But the point here is that those quality of an asset versus price action of an asset quite often are. I would argue that what's happening here actually is very natural, very normal, and really has nothing to do with the actual sort of vote on whether this is a good blockchain or a good idea or a good project or not. It's just price went too far too fast. So call it cleaning up. That's probably the best way I would describe this. And ironically enough, anybody who believes in volume profile, anybody who's taken my education programs, actually the level 2ers just did this. You all should look at this profile and know exactly where price is going. It's so obvious, but I'm not going to go there. What a tease. So, cleaning up the fluff, cleaning up the fluff, cleaning up the fluff, cleaning up the fluff. I think that's basically the theme of the market right now. One of our longtime site members, totally respect him. He's now off an analyst at another house, which is great. That's my aspiration for all of you. He put together a nice little sort of Bitcoin dominance conversation. I think this totally is the nail on the head. Doink. This is an ebb and flow game, even within crypto. There are crypto OGers that will pump altcoins, sell into the tops to get Bitcoin. And that flow just between alt and Bitcoin in itself is what I would argue this conversation is. So clearly, money is flowing towards Bitcoin out of altcoins. And, really, we have to just accept this as sort of this is the current market state. And don't call a top in this until an actual top has happened. Now, the one good thing I like about this is that if everything, altcoins, Bitcoin, everything all melted up into this event, I would say it's a 2017 peak, and that's the end of this bull. If anything, I actually like this image because altcoins technically should be the weakest into the end of the year because of tax loss selling. This is venture capital, failed ideas, etc. It becomes like a washing machine. And capital just gets sort of recycled. So if anything, seeing the alts as weak as they are, but Bitcoin rallying, actually I like that. And I think I've told you guys this before. I really like the idea that we are right about here. In fact, actually you can see, you are here now. I'm wondering where we are, but I think on balance, we're somewhere right around, I think it's about the end of 2015, beginning of 2016, in the sort of relative cycle comparison thinking. Mm-hmm. All right, and somebody on the other side obviously agrees with that. So I love the idea that if we can get serious pullbacks on everything, including Ethereum, if we can get serious pullbacks against these historic lows, they're beautiful bottoms. So ironically enough, when it comes to something like this, here's a very graphic illustration of how altcoins they're just not getting any money thrown at them at all today, especially things like Charlie. We might even create like empire fractal failures on these. And there's good old Bitcoin just doing its thing. Woohoo! And if anything, this is also good too, because I've repeatedly said Bitcoin cannot finish a major move without some sort of blow off top or blow off bottom. So, considering we're thinking a big cycle events, U.S. election, tax implications, let's get a nice big face rip on the corn. We had some levels that we drew recently, like off of here. This is an alt AB equals CD. It can actually take us all the way up into 13,000 area here. My hunch is this 8-to-1 that I've been following for quite a while off of this peak will probably be major resistance here in the short term. But long and short of it here is it looks to me like we're pointing higher here in the short term. We're banging into a bunch of angles here. This is going to be tough sledding. And if I'm not mistaken, Kavarkanator himself. So if we just did a classic AB equals CD, this is an old one with these. I was having a fun conversation with the kids in the daily brief here today. But if we do something along there. Oops, that's not what I wanted. Come on, you. Don't fight me. It's a Marlin. Oh, you're fighting me. Come on, you. Okay, let's try that one more time. Bang. There we go. All right, so A, B, C, D, something along those lines. 12,500, nice big fat round number. Also, too, you can see we're coming up against this level right here now. Really good stuff. You want to learn this, write this down. When we cleared through this high, we want to look left, and you can see the next key resistance is this high. That's 1265. 82, and today's high is 1259.94. So that makes sense. If this really is a top, the bear will come in and defend this top. So now actually we're going to see, right? We use the concept, the institutional fingerprint. Basically, this is their fingerprint. This is where they stopped the last bull. from there down to there, this whole range in here. So if they believe that this still is a bear, why don't we make that orange or something? If they believe that this is still a bear, this is going to be where they're going to step up and defend this bear. I guess we had talked sort of it through the daily brief and stuff about how this bot level just was a pain in the fucking ass for me. I mean, I just didn't get any way I wanted to get in, but I just didn't get any way. I trade a very specific trading plan. If I break the plan, then I'm really angry at myself. So I didn't break the plan, so as a result, I just had to leave this go. And you can see I'm a little pissed off right now. There's nothing I can do about it. It's just the way it goes. Also, too, I'm interested in stock market proxies on the corn as well. So over in the stock market, I was watching this thing like a dog. And it just took off as well. Just leaving me behind. So, at this point, I just have to be patient. I just have to be disciplined. I have to see if I can get some sort of pullback here to sneak in off this. But as it stands right now, they're Bitcoin's moving up. Bitcoin. What else can you say here? I think that pretty much summarizes it. Like I said, the thing that surprised me a bit out of all of this was seeing the way that the pooper coins just fell right out of bed here this morning. So I do like this as we were, like I said there a few minutes ago, Colin was calling for Bitcoin dominance and sort of this move I don't know whether he was calling this move, but in particular, looking for the altcoins to underperform. So I was pretty impressed with that call. Way to go, Colin. But you can see here's just one example of sort of altcoins. This just looks like trouble. And I showed you that DeFi network sort of picture. That looks like trouble. Link looks like trouble. So the leaders, this dot, I was worried about that. Looks like an absolute train wreck. So, altcoins, there ain't anything to do right now in altcoin land. Okay, well, hopefully that gives you a nice little summary of what I'm seeing in the market. Obviously, everything can't be peaches and cream 24/7. Little verklempt that I wasn't able to sneak my way in on this latest Bitcoin push higher here. Hey, but it's a trader's life. You gotta trade your plan your trade your plan. And I just didn't have anything to let me get in, so I just have to sit and watch. All right, have yourselves a great rest of your day. All the best. And the only thing left for good old Brian to say at this point is a big bye for now.